Welcome everyone to this edition of the Business Behind the Success. Today we're going to be discussing the business of property taxes and deferred compensation. And we have with us the Treasurer and Tax Collector, Keith Knox. Keith, thank you for joining us today. How are you?
Oh, you're welcome. I'm great. I'm happy to be with you and happy to be talking about a couple of my favorite subjects.
Cool. So before we get started, I understand that you have a disclaimer that you want to share. So I wanted to give you opportunity to share that before we get started.
Sure, please. I appreciate it. And if your audience will bear with me, just because of my day job as the tax collector, I'm also a trustee on the pension board for the county. And then I also sit on the committees for the 457 and 401 plans. So it's important that I clarify I'm just talking as myself right now and not representing the county. So while I am the treasurer and tax collector for the County of Los Angeles, I am here today with you in my personal capacity, and my views and opinions that I share are my own and not necessarily those of the County of Los Angeles, our pension plan, LACERA, which is the LA County Employee Retirement Association, and our deferred compensation plan administrative committees. What I share today is just for informational purposes only. It's not intended to be a substitute for independent professional, legal, tax, investment, financial, or any other professional service advice, which should always be obtained from professional service providers. And then any reference to commercial products or services during this podcast does not constitute endorsement of those products or services by either myself or the County of Los Angeles. So with that out of the way, I'm all yours, Dewan. Fire away.
All right, thank you. You know what? I think it's important that you shared that, because sometimes, when we go to speak to different experts, sometimes the question comes up, well, what would you do? And sometimes the expert will say, well, I can't really give you advice, but these are your options. And people feel like, well, I know what my options are, but I want to hear from the expert. So I'm thankful that you shared that disclaimer, because I'm really interested in finding out what your opinion is as a person based on your experience.
Sure.
So before we get started and we get into the property tax and then deferred compensation, could you tell us a little bit about the Treasurer and Tax Collector Department and what that department does?
Sure. So I am the Treasurer and Tax Collector for the County of Los Angeles. We are one of the 38 departments in the county. I have about 500 positions in my department. Most people know us for collecting property taxes. So if you own property in the county, you know that you get an annual bill from my department, and you have a few options to pay for that. But we also are the county treasurer, or I am the county treasurer. So we oversee a treasury of approximately $40 billion. I am the treasurer for the county as well as the school districts, and that includes community college districts. We oversee the 401, 457 plans in my department. And then we also have the public administrator, which is a bit obscure for most folks. They won't necessarily think of, oh, what is the public administrator? And that's where we care for the estates of the deceased who do not have any heirs either able to administer their estate, or maybe the heir just is out of the area, out of the country, and needs us to administer their estate for them. So it's a very unique department. It's a very specialized function. It's a small department compared to bigger ones like public social services, where you've worked, or the sheriff's department or public works. It's a very unique department, but very important in terms of moving money throughout the county. We oversee all the bank accounts. We do things like oversee the contracts for armored car services. A lot of accounting personnel. So yes, a very diverse department. A lot of great people help do a lot of terrific things that put us in good shape as a county. So that's a little bit about us.
But thank you for sharing. Was that something that you always wanted to get into as a person, or what was your, when you went to school and you were going through college, what was your, just out of curiosity, what was your major, and what did you think that you wanted to do?
Well, I thought I wanted to be on the Dodgers, but it turns out there's not much call for a really skinny guy that can't play that well. But no, I went to school as a poli-sci major. My dad had worked for the county. My brother worked for the county. So that was kind of a family legacy in terms of the County of Los Angeles. They both were on the law enforcement side. I was pretty sure I didn't want to do that. Wound up working for Parks and Recreation for the better part of 10 years, and then wound up at the tax collector. So I've been here pretty much 20 years since.
Nice, nice, nice. Thanks for sharing.
Yeah.
Okay, let's get started.
Yeah.
Property tax. Yes, tax is one of those things that very few of us enjoy, unless we're on the side where we're collecting it, right? But in terms of paying, there's very few of us enjoy paying taxes. So, who pays property tax, or who's on the hook to pay the property tax?
Well, hopefully everybody that I send a bill pays their property taxes.
Right.
So it's interesting because we do get people that confuse us with the IRS, which are the ones that we pay our income tax to. So for folks that own property, and in a lot of cases, that's the people that own a single family residence. So we'll break it up a few different ways. But for the people that just own a house in the county of Los Angeles, you get an annual secured property tax bill from our department, and you pay that either all at once by December 10th, or you can break it into 2 installments. One, the drop deadline is December 10th. The next drop deadline is April 10th. We have unsecured property taxes that we bill, and I like to think of it in 2 different ways. Secured property taxes are obviously the big ticket item for us. There's 2.4 million parcels that we send bills out for. And I think our total roll that we collected last year was just north of $22 billion.
Wow.
So that's a lot of bills we're sending out, a lot of money we're collecting. The vast majority of that is the kind of typical single family residence. A much smaller piece are commercial properties. I mean, we certainly see commercial properties everywhere, but just because of their size and where they're located, there's certainly not as many as just residential properties. And then you also have the rental type properties, the multifamily, duplexes, triplexes. You have the condo complexes. You have the apartment buildings, that type of stuff. Less on the condo, more of the apartments, things like that. So those are all secured property taxes. I tend to think of those, they're kind of secured to the ground, they're affixed to the ground.
Right.
The other ones that we collect that most people don't pay, that's unsecured property taxes. And I won't go too deep for this conversation, but businesses pay taxes on business property, so business equipment, so if you owned a print shop, you'd have these big pieces of printing equipment that would help you do your work. The assessor will actually place a value on big pieces of equipment, and those get taxed. Okay. And the timing and payment of those taxes, the timing's a little different, but that's a separate type of property taxes, much smaller than what we collect on the residential side.
Okay, thanks. How was the amount calculated for what owners owe? Right? Is it typically like 1% of the sold amount, or how does that process work?
Okay, so the best way to start out is just pointing out our property tax portal, which is where you can get information from several different departments about the property tax process. So I'll mention this a few times, but for everybody out there, propertytax.lacounty.gov is a great place to start, just to better understand the process, as well as look up information on your own property taxes, and then also be able to pay your property taxes online, which is something we think is really great. And I'll touch a bit on that process in a second. But I'll start out at the front end. So at the very front end of the property tax process is, how do we even know, something changed? How do we even know that a property was sold? Mm-hmm. So the register recorder, county clerk, many of you have heard of that. You've heard of, I got a copy of a deed. If you ever refinance your property, you'll notice you'll get some new information in the mail from the register recorder saying, Dewan, you've recorded, this property. So the register recorder finds out, wait a minute, a property has been recorded in your name, and they inform the assessor's office.
Okay.
The assessor, according to their name, goes out and assesses property. So you bought your property. Let's say you brought, your property for $1 million. The assessor will come out and say, "Oh yeah, we've assessed the value of your property. It has an assessed value of $1 million." Great. That information is sent to our auditor controller, which is in the County of Los Angeles, and they have various pieces of information regarding assessments. They have tax rates that they apply based on where you live, the tax rate area, and then they help determine and calculate how much property tax you owe.
Okay.
They give that information to the tax collector, which is me, and we print that on a bill and send it to you.
Okay.
So most people get mad and think that I'm the one ratcheting up their property taxes, and all we're doing is sending you a bill and collecting it.
But they should really blame the auditor controller.
Well, no, don't blame the auditor. Don't blame anybody. It's all part of the process.
Right. Right.
But yeah, that's how it all gets started. That's how we find out, that there's a property and that you need to pay taxes on that property. The other thing that is not always understood, and I think you've talked about this before, Dewan. It's okay. My house. I've been in my house for 20 years.
Mm-hmm.
My house, as we all know, our real estate market has been crazy. Anybody that's owned their property for more than a few years now has a lot of equity.
Right.
Well, geez, I bought my house for 500,000 10 years ago, and now I hear it's worth $1 million.
Mm-hmm.
So does that mean I'm taxed on $1 million worth of a house? And the answer is no. Your property taxes are based on, the assessed value of your real property of your house, and it's also based on that base year of that property. Now I'll just pause a minute and I'll take a sip of water because I want to take this part kind of slow.
Okay.
So you bought your house for $500,000 in 2015, and that then becomes the base year value, and we're going to use that value, that $500,000, to determine what your property taxes are. Property taxes are comprised of a few different things. Number one, there's the general tax levy. And so that's 1% of the assessed value.
Okay.
So on $500,000, what's 1% of that, Dewan? You're smart.
5,000.
Good. That way I don't have to do it in my head. So your property taxes are $5,000 for that general tax levy. So your tax bill has a few different things on it. Number one is that, okay, what's the 1%? That 1%, some of it goes to the county, about a little less than 25 cents of every dollar goes to the county, but money is also sent out to cities, special districts, special agencies, to pay for, the services that we all rely on.
Right.
We all benefit from public works. We all benefit from libraries. We all benefit from hospitals. We all benefit from the animal care and control services, that come help with different odds and ends. We benefit from parks and recreation. But money is required to fund those types of things. So that's a big chunk of our property taxes.
Right.
You also have what's called voted indebtedness. And these are easy to forget, but we all participate in the elections. We're encouraged to. It's a right and a responsibility to participate in elections. But you'll see things in there, in addition to voting for people running for office. You'll see, oh, Dewan, the school district near you, has a school bond, or there's a new bond to build things, and you go, ooh, I would love to have better schools. I would love it if schools had more money to fund infrastructure improvements because they don't have good HVAC systems. I would love it if they had Wi-Fi and connectivity and infrastructure to support all that. So you vote for this. And what eventually happens is that school will issue bonds, and that they'll sell these bonds. Investors buy the bonds and give the investors, the investors give the schools money, and the schools fix up the campus, but then that money needs to be paid back. So that is also what's billed on the property tax roll. So we have voted indebtedness. So you voted for bonds, and now that comes on your tax bill. So I'm looking at a sample right now, and it has like Metro Water District. Maybe they've done some projects that were voted on. Community College sold bonds. Unified Schools sold bonds. So that's part of your tax bill. And one of the the somewhat funny things we hear sometimes is, well, why do I have to pay that? I didn't vote for it.
Right.
It's kind of like, well, I didn't vote for a lot of people, but they still hold office.
Right.
They still won the election, so it's the same with this. Um, and then there's a lot of other little odds and ends that are called direct assessments, and that can be, your sewer maintenance and services, mosquito control. We hear about, oh, they're spraying for mosquitoes, and they're watching out for killer bees and all different manner of things. Lighting districts,
Mhm.
trauma and emergency services. We all pay a little bit to support ambulance services, trauma services, sanitation districts, fire department,
Right.
um, those types of things. So a lot of little odds and ends. Yes, one big chunk comes from that $5,000 that you helped me calculate,
Mhm.
but a lot of those other little odds and ends on a kind of typical, property like the one I'm looking at. The assessed value is what, almost $600,000,
Mhm.
but their tax bill is almost $7,000.
Okay. Okay.
So, a lot of those little ambulance bond issuances, things, they add up and they're tacked onto the bill.
Are the odds and ends, are those based on the assessed value as well, or are those similar to like flat fees that everyone would get charged the same amount?
Though it can really vary.
Okay.
Sometimes it's a flat fee. Sometimes it's based on the size of a property. You may recall something we voted for and is important to the county, a water measure. Where we wanted to improve our ability as a county to capture rainwater and do different odds and ends. So the county, and I'm not an expert in public works, and I could have I could have included that in my disclaimer, but one of the things that they were looking at using satellites and GPS and everything is, your property, how much of that is concrete, where rainwater hits concrete, runs to the gutter, runs in the storm drain and goes out to the ocean, versus water that can land on grass, something that's permeable where it can soak back into the ground and the water table. So they used a very careful calculation of, well, how much of Keith's house is concrete driveway versus grass?
Got it.
So it can really vary, but that's a great question.
Okay. Thank you for that. And to circle back around to the register recorder to make sure I understood you correctly,
Mhm.
um, when there's a change in title and an assessment is performed, does that happen regardless of whether a person transfers the ownership over to someone else, and um, in the place in the instance where there was a sale? So regardless of whether there was a sale or a transfer of title, it's going to get assessed no matter what. And then whenever that happens, then that becomes the new price in which, or a value rather, in which the property taxes will be generated from. Does that
Sure.
make
Yeah.
sense? Okay.
Yeah. No, it does. There's actually several different ways that property taxes can increase. They can also go down. If for some reason you bought at the very top of the market, at $1 million, and then as we've seen, the economy's been on a bit of a downward trend this last couple of weeks. There are times when house prices fall too.
Right.
So you could, file with the assessment appeals board. You could file with the assessor and say, look, I think my house is worth a lot less than it used to be, and I should really be taxed less, based on that. So, but
Okay.
typically they'll increase, and I'll cover a couple of different things, and hopefully I'll answer your question. Let me know if I don't.
Hmm.
So the easiest example is when you sell your property and somebody unrelated, anything to you buys it.
Right.
That's a clear sale to a new property owner. That triggers the assessor to go out there and say, okay, Dewan bought it in 2015 and it was based on that 500,000, the $5,000. Now it's going to be based on 2022 as the
Right.
base year. And now the assessed value is a million. And instead of it being 5,000 as the base tax, now it's 10,000.
Right.
Clear example. Obviously, we have a lot of instances where, grandparents want to leave a house to somebody,
Mm.
parents transfer a, title to a child. So those are instances where people really have to be mindful, because if you ignore things like that, the assessor is going to come along and say, oh, we see a change of title. It
Mm.
must be that brand new sale to somebody that has nothing to do with this property.
Right.
Whereas there are steps you can take. And again, that property tax portal that I mentioned, you can go on there, look at the assessor's website. Again, that's propertytax.lacounty.gov, and find out, oh, okay, I think, yeah, there's some provisions for how I transfer from a parent to a child.
Okay.
Well, I read something about Prop 19, where if I'm, of a certain age, I can, retain some portion of the taxable value of my previous property if I buy a different property. So I don't want to get too into the weeds, but a lot of good information there. Another thing that happens to a lot of folks, and what happens is they add on. So property taxes are based on your square footage,
Mm-hmm.
things that are really material to the house. If you change the wallpaper, doesn't cause it to be reassessed. If you get a new
Right.
refrigerator, but if you add another bedroom,
Mm-hmm.
if you build a second story, you're adding square footage, you're adding something that can be assessed. A number of years ago, we built a swimming pool. That is an accessible event.
Mm-hmm.
That doesn't change for you. It doesn't change the fact that your house has a 2015, base year value. It
Right.
just means, oh, there's something new that we have to add. So sometimes people think, oh, geez, I would love to build, a lot of times what we're talking about now for affordable housing are the accessory dwelling units,
Mm-hmm.
or, people call them sometimes a mother-in-law suite. So
Right.
you want to build a little house in the back of your big property so you could rent it, or
Right.
maybe you wanted to have a relative live there. That little piece of additional square footage would be, a new taxable item that the assessor would come out and look. So changes in ownership, new construction, those are typically the things that you'll see that will cause your property taxes to be reassessed.
Okay. Okay. Thank you.
Mhm.
And does this process work the same in terms of the calculations that you described earlier? Does it work the same for commercial property as well, or are there some differences in that arena?
The differences with commercial property are typically the ownership of commercial property is not always as clear cut, and it's not always, just a single owner to a single owner. A lot of times you can have, um, and the assessor also assigns an assessed value to things like Dodger Stadium,
Mm-hmm. Right.
and Staples Center, or now crypto.com or whatever the heck they're called. So it gets very complex when corporations are involved, and and the Dodger Stadium is sold, but the parking lots were still retained by the previous owner. So a lot can go on in the commercial space that's very different
Mm.
um, than the residential side. One thing I did want to touch on too is, we frequently hear in my office, oh, I can't understand why my property taxes are always going up. And they do go up.
Mm-hmm.
Every year that $5,000, the assessed value of your home can go up a maximum of 2% per year.
Right.
So that $500,000 assessed value can go up in one year by 2%.
Mm-hmm.
So are you quick with what 2% is of
2% of 5,000?
500,000?
Oh, 2% of 500,000 is the 10,000, right?
So 500,000, yeah, it should be, right?
Yeah.
Yeah, all right. So each year your property can go up 2%, kind of a cost of living adjustment. So it doesn't, I mean, lately that's been recurring every year. It doesn't have to, depending on how the economy is, but it can happen every year. So at a minimum, your $500,000 assessed value is now a $510,000
Mhm.
assessed value. And then what happens is your $5,000 base property tax is now what?
I'm sorry, I didn't catch you.
If your house, this is the tricky part, Dewan. You didn't think I was going to ask you questions, did you?
Right, I know. I
Your
wasn't.
your house was worth
Off guard.
500. Your house had an assessed value of 500,000,
Uh-huh.
and your base tax was 5,000. Now your house has an assessed value of 510,000, and 1% of
5,100.
that is now 5,100.
Right.
So that's what people, they think that, oh, well, no, I haven't moved since 2015.
Mhm.
I don't understand why my taxes go up. That's just that little cost of living adjustment because the services that I talked about at the beginning, hospitals and public works, and with all we've been reading about with inflation, things become more expensive over time. The salaries, the cost of
Right.
producing all these services. So that just helps us keep pace.
Right.
Um, but that's before you get into the voted indebtedness and the direct assessments and other things too.
Right. So since we're on the topic of taxes going up slightly, right, to pretty much like cost of living adjustments, um, would you have any advice for people who are on fixed income, or who may be senior citizens and they may be approaching the point where it might be a little tight for them? Are there any programs that they can look into to obtain some relief from those
Sure.
changes?
Yeah, and I also want to mention, we've all been living through the last few years of COVID,
Mhm.
and that was readily apparent in terms of economic impact to our property owners,
Right.
because you recall there was a length of time when restaurants were closed, schools had kids at home, so you had a lot of employees that were not working. And
Right.
so one of the things that we did back in 2020 when this started, and we're still doing, is if you were unable to pay a portion or all of your property taxes, for COVID related circumstances, I have the authority under state law to cancel penalties if you were unable to pay them. And what we found was, we had a large number of people that applied for a penalty cancellation, and most people just needed more time.
Right.
That they were dealing with some tough circumstances and just needed more time to get back, working full time. Maybe they took time off to care for somebody even,
Right.
or people had to stay at home to watch their kids because schools were closed, so they couldn't work. And we have a lot of people that are hourly employees working in the service industry. So we really helped a lot of people. I think we approved over 40,000 penalty cancellations that first year, which was phenomenal. So
Right.
so if people still to this day have COVID related reasons why they couldn't pay their taxes timely, they can find the information on our website to apply for penalty cancellation. The state of California has programs specific for seniors
Mhm.
and the disabled, that need assistance paying property taxes. Some of those have some uh, income eligibility. You have to be below a certain income level to qualify. We also have programs for the active military, that are impacted perhaps because they're stationed overseas.
Mhm.
So there's various programs. There's an important one that we actually released a press release on, I think just last week, that's through the California Mortgage Relief Program. and this was through the state, and it's almost like a grant fund where people originally could apply to get assistance with making their mortgage payment.
Right.
They have now broadened that to assist people who have been unable to pay their property taxes. And
Nice.
so there's information on our website. Again, if you go to that property tax portal, you can drill down to the treasurer and tax collector where I work, and you can find information on how to apply for that. And it, I think, is up to $20,000 of relief. Again, you need to have some qualifying circumstances,
Right.
um, but that's certainly a tool and a benefit, to assist people that need it.
And that's great information. Thanks for that.
Mm-hmm.
Yeah. Now, the flip side of that, there are some people who are fortunate enough to get to the point where they can just let a property go because they're not paying their property taxes. And I don't know all the reasons why a person would just stop paying taxes and fall into delinquency. But how does that process work? At what point does someone fall into delinquency? And if they maintain that status, what ultimately happens to the property?
Sure. Yeah. So that obviously happens.
Mhm.
Some people buy property not understanding that they're going to owe property taxes. They think it's kind of just a one-time thing. Some people buy vacant land, thinking, oh, okay, this is going to be great. Maybe bought a parcel up in the North County. Sometimes people watch infomercials and think, oh, okay, I'm going to buy some land and I'm going to do some things with it, not understanding all that comes along with it.
Right.
We always say that, owning a piece of property, carries a lot of responsibilities, and I think a lot of us, that have lived, in an apartment, and you think like, oh, I wish I had my own house, and then you get, your house, and then, like when something breaks, you don't just call the landlord and complain to that person like, hey, this light fixture doesn't work anymore. It's like, oh, I've got to go to Home Depot and replace that, or I've
Right.
got to pay an electrician to come rewire something, so there's responsibilities that come with maintaining a house and responsibilities that come with, paying property taxes. So when people don't, they get a notice from us saying, hey, you failed to pay by the deadline of December 10th. We've just applied a 10% penalty to your parcel.
Right.
And that gets most people's attention,
Mhm.
and I think out of 2.4 million parcels that I mentioned, we sent last year, a little more than 100,000
Okay.
notices. So it's not a huge percentage of people, but because we're so large, 100,000 is quite a few.
Right.
Um, and a lot of those people catch up. Then the next installment comes that's due April 10th. If they don't pay again, we say, hey, you didn't pay again. We just slapped another penalty.
Mhm.
If they don't pay by the new fiscal year, so we're in this month of June right now when you're recording this, and if people don't pay by June 30th, then it becomes tax defaulted.
Okay.
So again, I don't want to go too deep because it's more about these big picture themes than it is the vernacular. So once people don't pay for a year, it's basically, okay, we're sending you a notice. I think there are people that think like, oh my gosh, I didn't pay my property taxes. You're going to sell my house tomorrow,
Right.
and that's not the case. We don't, I don't call Experian, and report Dewan for failure to pay his taxes, because a lot of people, they'll forget to pay their taxes. A lot of people, just it's like not top of mind. Sometimes they had an emergency, maybe they were hospitalized and were unable to pay on time. So there's different factors, but for residential type of improved property, with a house on it, we are not selling a property for 5 years.
Okay.
If it's a commercial property, we can sell it a little sooner, 3 years. But we still have an extensive research process that has to be conducted, for properties where there's a homeowner's exemption. We know that somebody likely lives there that owns the property, because a
Right.
lot of people have rental property. But if I know you live in your house that you bought in 2015 because you have that exemption, and we can talk about that in a bit if you want, I will send notices to your house. We will send a member of the sheriff's department to your house to personally deliver a note, not to threaten you or squeeze you or anything like that. But they go out and they'll also bring somebody that is a community services type of person,
Mhm.
because we have a lot of elderly people here. We have a lot of people that maybe don't understand how things work. They don't necessarily have the faculties to understand what's happening to them.
Right.
And we want to make sure that if we say, look, you haven't paid your property taxes by law, I'm required to sell your house at a certain point. We need to make sure they understand that.
Right.
Because if somebody does not, then I say we're not selling their house right now. We're going to try and engage them a little further, because it's not our goal to take things unnecessarily from people. It's
Right.
not our goal to increase the number of people that are unhoused.
Hmm.
I really have no interest in doing any of those things. um, but it's required under state law,
Right.
and it's important because it's not um, fair, and I don't always like to use the word fair, but if people are paying property taxes, everybody should pay property taxes.
Right.
And if a homeowner is not going to pay their property taxes, then we need to put that property in the hands of somebody that is going to pay property taxes.
Right. Right.
So that's a little bit about the process. We have an auction
Hmm.
that is online, and people can register and participate in our auctions. We sell a lot of vacant property. Um,
Hmm.
a lot of it is up in the North County, where we have the Antelope Valley. There's a lot of vacant property up there. I think sometimes people buy things not knowing where it is, or
Hmm.
or what it would take to build something. Um, and a lot of times, if something, we'll use me. I won't pick on you because you didn't pay your taxes. But if I didn't pay my taxes, if I get a final note that says we're going to sell your house, a lot of times I'll say, okay, I don't want to lose my house. I'll borrow some money from my friends and family and pay my taxes. So a lot of people redeem the property, is what we say. Other
Right.
times a lender will step in. So if I have my loan through Bank of America will say, no, 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 we don't want that house auctioned off by the tax collector. We'll pay the taxes and then settle up with Keith later. So
Okay.
there's a lot that goes on, but the key takeaway is just we work with people. We have payment plans. Assuming you meet certain deadlines and criteria. So it really is about just responsible ownership, paying timely, being understanding of circumstances that impact people's ability to pay timely, and then if they can't, then I follow through with the oath that I took, that I would carry out the role and responsibility of tax collector,
Right.
um, and then sell properties that are needing to be sold.
Right. I know that you mentioned that sometimes some people don't know what they're buying, or when a property is auctioned off. How does that process work? So when you auction a property off, are you auctioning it off for the amount that that is owed and is no extra? And um, how does that process work? Does the person just go online, or is it auction in person and they say, hey, you know what, I want to buy this, and the person has to have cash on the spot right then and there and be able to write a check, or
Yeah.
can they go back and run to the bank? How does that process work?
Yeah, no, good question. So it's not to avoid answering the question, but just to make sure I don't miss anything. Again, all of that is spelled out on our website. If you
Okay.
look up secured property and auctions, you can see exactly how the whole thing works. But in a nutshell, we used to do them in person pre-COVID.
Hmm.
It's like putting on a big production and everybody's there in person. COVID, moved a lot of things virtual, and most counties in California did them virtually anyway. And we figured, no, we better get with the times and make it easier for more people to participate. So you register online, you place a deposit. If you buy something, you have a certain amount of time to settle up. and pay the full amount. The minimum amounts are largely based on our costs for putting that property in the auction. We have to send notices and advertise and do all these things. And then we also want to recover those outstanding taxes too.
Right.
So if we sold a $500,000 house, it wouldn't necessarily have a minimum bid of 500,000. We would want to recover for the tax collector what's owed to us.
Right.
That would be the starting point. And typically, if it's a house on a parcel, it's going to come close to market value by the time the auction is done.
Okay.
A lot of people do due diligence.
Mm-hmm.
There's a lot of eyes on these parcels. So something that really is simple to say, nice, and has a good structure, and real estate is highly desirable.
Absolutely.
You're not going to find too many opportunities to just, ooh, I really snuck one over, I really got something that I really made a fortune. It's just the reality of how it works. But yeah, it's a good process, but people need to do due diligence, because sometimes they think, wow, I'm gonna, I live in Texas and I'm gonna own a piece of California. And they don't realize they're buying a parcel that's not just vacant.
Mm-hmm.
And maybe it is in a part of the desert, but it could be that there's not even a road next to it.
Right.
There's parcels that obviously around us. We're so used to driving down city streets that everything touches a street, and that's not the case.
Right.
And sometimes there may be two parcels, and one is an actual house and the other one is like a little garage, and people think, wow, Malibu, I'm buying a house, and it's a garage, it's a carport, so buyer beware, do your due diligence.
And it may need a lot of work.
Yeah.
So you pay all this money for it, and then you turn around and you have to invest another $50,000 to $100,000 into it to get what you want.
Yeah.
Okay. Well, thank you for that wealth of information regarding property taxes. And this pretty much concludes our property tax segment. And next, we're going to be going into deferred compensation.
Great. Please visit our property tax portal, which can be found at propertytax.lacounty.gov. It's got a lot of great information from the Office of the Assessor, the Auditor Controller, the Assessment Appeals Board, and the Treasurer and Tax Collector. And if you are interested in finding out information on how to pay your property taxes, certainly you can also go to our website, which is ttc.lacounty.gov. A lot of good information about how to pay your property taxes online, how-to videos, multiple languages that you can change our website into. And then we also talk about our other business lines in the department, including our investments, our auctions of defaulted properties, business license, and then of course the public administrator, where we talk about estates of the deceased and just some good general information that everyone can learn about.
For more info about what we do, please visit dbinvestmentsco.com. We can be contacted at info@dbinvestmentsco.com. Once again, that's info@dbinvestmentsco.com. Thank you for tuning in to this edition of the Business Behind the Success. Our goal is to have informative conversations and share personal perspective with individuals who are successful in their field of expertise, in hopes that it will lead to more favorable outcomes for anyone seeking guidance. If you support the content, please hit subscribe.